gotta keep your spirit dreaming, no matter how small, just give it your all. You know we keep the dreaming easy. It's easy. It's easy. It's easy. Don't you know it's easy? It's easy. It's easy. It's easy. I've got a little story to tell, a tale of hope and inspiration now. Come gather round, 'cause I know it well. Will you believe me if I show you how we took a dream in a world that told us no? We never let go, can't let go when it has to grow. This dream was the spark that lit.
Good morning, everybody, and welcome to our webinar today. A warm welcome to our Easy Equities community and beyond. There are so many people who are really interested in the topic today, which is about the Middle East politics, culture, and market insights. And I think that goes beyond just investors. I think everyone, we've been looking at these headlines lately. There's so much out there online and in the news, and today is really about bringing an informed perspective to that conversation. So I'm really excited to announce our speakers today. We're joined by Jane Dutton, an award-winning news anchor with over 20 years experience. Alongside her is Isaiah Mhlangu, chief economist at RMB. And moderating today's discussion is Anthea Gardner, founder and managing partner at Cartesian Capital Asset Management and a long-standing Easy Equities partner. So I'm going to hand over to Anthea in just a bit. But before I do that, please, if you guys have questions, use the Q&A functionality here. You can post your questions there. We're going to get to them at the end of the session, and we'll answer whatever we've got time for in that space. But we're also going to be recording this and sharing this on our YouTube channel, so you will get a chance to go back and kind of rewatch some of this if you want to. So Anthea, I'm going to hand over to you.
Thank you very much, Kylie. Look, this is a bit embarrassing, but I'm going to publicly admit that I am such a fangirl of the two speakers. I've known both of them for a while, and they're great critical thinkers, so I'm very excited to hear what they have to say. I often think about or talk to my team about holding two opposing views in your head at the same time. Not so much cognitive dissonance, because that implies a subconscious holding of these two opposing views, but rather cognitive flexibility, the ability to think that both sides are wrong. In my case, I'm strongly of the view that both sides of this US-Israel war have behaved badly, whether it's flouting international law or committing human rights atrocities. I also had the opportunity to live and work in Tunis, and after a year of being there, the Arab Spring kicked off. Great stories, by the way, if anybody cares to hear them, of me leopard crawling on the roof of the house when the militia were gunning down people and burning down houses in the street that I was living on. Anyway, but let's get to this. I think that gave me a good insight into the Maghreb, the region, and kind of how people think. We're so lucky to have Jane Dutton with us today. I'm going to dive straight into it. So Jane, I haven't watched your interview with Benjamin Netanyahu. Can you give us some background? When did you interview him, and how did you perceive him as a leader?
Firstly, good morning. Thank you for being here. It's a fascinating topic that impacts each and every single one of us. And like the leaders, we've got no idea how it's going to play out, right? The leader being one of them, Benjamin Netanyahu. It was a very long time ago. I was working for BBC World. He had a lot more hair, but other than that, he is exactly the same. And what resonated so much from that interview, I mean, he comes across as warm and charming, and he really brings you into the problems that they face. But even then, as he does now, painted Israel very much as the victim, a victim of circumstance, a victim of the region, so that they're constantly under siege. And even the name is interesting, which was something that we debated when I worked at Al Jazeera, that, the IDF, the Israeli Defense Force. Al Jazeera always thought, well, what are you defending against? In fact, that Israel was perceived then, as they are often perceived now, again, as you say, many sides to the story, as being the aggressors in the region. So it was very much that we are almost under siege. The Palestinians, it's time to, put up the Palestinian wall because of some of the attacks happening on Israeli soil, which is also known, and then also played the Trump card. I mean, ever since he's coming to power in the 1990s, the Iran card. Ever since he's coming to power in the 1990s, Iran has always been the bogeyman. And what we're seeing happening now, I mean, it was set up ages ago. He's wanted this to happen. This is what he's been desperate to play out. And I don't know if you remember when he made a speech at the United Nations, and he loves these pictures, he loves these props. And he was talking then, as he was telling me as well, how Iran is so close to building a nuclear weapon, that it's imminent, that it's within days, and Iran poses an existential threat to Israel. So that conversation around the Palestinians about being victims in the neighborhood in Iran, what he said to me then pretty much is what he's saying to us today.
And Jane, so do you also have some insights into the new supreme leader appointment? Ayatollah I've got to get this right, I practiced. Mujtaba Khomeini wasn't named by his father as one of the 3 top picks, but he was appointed by the 88-member Assembly of Experts. I love that. And we know Trump's view on the Ayatollah, or the new Ayatollah, but do you think that the new supreme leader will be readily accepted by the Iranian people?
I mean, again, it's such a divided country at the moment. He wasn't in the top 3. It wasn't supposed to be a family business, but shock horror, it's played out that way. People don't know much about him. He's been very much behind the scenes. I was talking to an Iranian contact of mine yesterday, and he's considered to be ruthless. He's very close to the clerics, which is understandable, his father being one, and he's also very close to the Revolutionary Guards, and they are the power brokers. Obviously, the supreme leader controls absolutely everything. So people are concerned that, surprise, surprise, he's coming to power, but also that he's been part of understanding the deep state. He knows how to control the protests. He knows about the dangers at play there. I mean, this is a structure that was put in when they came into power in 1979, built to absorb this kind of attack. I don't think anyone expected it to be that large. The protesters, I mean, as you've seen, obviously recently, the devastating protests after the killing of an Iranian woman killed thousands of ordinary Iranians, and that sort of extreme power on your own is pretty good at muting people. So I think internally, though anything could change, obviously, I think internally he's pretty safe. He's got the support of the Revolutionary Guards, and also what makes him even more dangerous is that not only was his father killed, but his mother, his wife, and a child of his. So nothing like that sort of pain, that sort of personal revenge to build into the arsenal. I think the biggest threat to him possibly are external forces. How far is he going to push it with the Gulf? Obviously, he's been targeting Gulf states that have military bases, US military bases, because as far as Iran is concerned, this makes them legitimate targets, but they've also hit civilian sites. So when will the Gulf states turn? I feel that they've overplayed their hand. And obviously, you've got the Israeli factor. We know that Trump and Netanyahu they've already threatened to take out the next leader, particularly if it becomes somebody from Khamenei's family, which it is.
Okay, that's just very scary, because all I'm hearing is that this war, there's no end, or there's no resolution or comfortable resolution to this war. And as asset managers, part of our job is to understand global geopolitical and economic situations. So Isaiah, please, can I ask you a favor? Can you look into your crystal ball and tell us whether you see that this war as simply a disruption in the supply chain, leading to maybe a short bounce in inflation, Or is it a fundamental shift in the supply chain? And Isaiah, you know, of course, where I'm going with that question. Like, how does this war impact the outlook for global growth, inflation, and interest rates?
Look, firstly, thank you for the invitation to join. If we just look in terms of what are the channels of impact, there are several. First, there is the market's impact through oil prices. We saw a 30% increase in oil prices past $100 per barrel. Last night, it declined by 32%, following Trump, statement to say the war is potentially almost close to being over. But we don't know whether it's over or not. What we have learned over the last year or so is that Trump's administration's policies are quite unpredictable. Anything can change anytime. So it really depends on how long the conflict continues. Just reading, what coming out of the Middle East, it doesn't suggest that this war is going to be over anytime soon. If it lasts longer, then we are going to see the implications on the global economy. 20% of global oil supply flows through the Strait of Hormuz. If that is closed, it will have significant impact. But we also have a majority of food that goes into the Middle East that comes through the Strait of Hormuz. So you have petrodollars that goes out of the Middle East, and then you have food that comes into the Middle East. If that is blocked for 3 weeks consecutively, you start to have food shortages in the Middle East. So that will have an impact in the Middle East itself. But for the global economy, it's much through risk aversion, oil price increasing, and perhaps central banks even thinking we're no longer cutting interest rates and potentially even hiking interest rates. We have a recent memory that we have from 2022, Russia's invasion of Ukraine. Oil price shot up. Major central banks across the world hiked rates, which essentially, reduced global growth and came with a cost of living crisis for many economies. So that's sort of a scenario that can play out depending on how long this conflict, continues, but also how severe it is. There are some extreme, expectations in the market that says potentially we can even think about $130, $140 per barrel for oil. If we get into that environment, then it's a proper market shock. We would have also had, even in our own economy, there's Reserve Bank saying we are seeing significant sell-off in our bond markets, and we are assessing potentially we might even intervene. Already, we are reaching some sort of stress that we are seeing in the markets, but it's not yet severe, which means the impact is already being felt. So that is the sort of impact that we can see through oil. The global demand for South African exports is potentially the bigger one. If global growth reduces because of this oil shock, it means our exports gets less demand. And that is a much bigger and much more consequential implication than the price effects. The price effects can reduce depending on whether the escalation reduces. But as it stands, it's a wait and see. It really depends on the duration of the conflict.
We were on such a good wicket, Isaiah. I mean, our bonds had rallied above and beyond to fair value. Our stock market, equity market was up. It all feels like such an immediate turnaround. And I think it will depend on how long the war lasts. There's also a lot of talk about a stagflationary environment, which we all know is the worst for central banks or for the economy to manage itself out of. A stagflationary environment is just really not a good place to be. What do you think the probability would be given this economic scenario? Globally and locally, if you have an opinion.
If we look in terms of, the positive sentiment that we have seen over the last year, it's still there. If you look at South African assets performance relative to emerging markets, relative to advanced economies, since the GNU was formed, they have outperformed. They've outperformed emerging markets. They've outperformed advanced economies, whether you look at equities, whether you look at resources, whether you look at bond markets, whether you look at the currency, all of those have outperformed the emerging market average, which means it wasn't because of the emerging market, the sentiment. It was very South Africa specific. which is why we ended up outperforming. And that is pretty much there. Much of the drivers are still there, are still intact. The macroeconomy is improving, economic growth is improving, even though it's still quite modest. If you look in terms of inflation, well contained, of course, before the short upshot in the oil price that we saw. If you look at bond yields, they have declined significantly, which means the regime that we understood to 2019, for instance, we are no longer in that framework. Markets have, or asset prices have re-rated South Africa to a different new normal, and that is still pretty much intact. Of course, this is an external shock. What we have also seen is the sell-off in South African assets is not as severe now relative to what it used to before, which means there's a lot more resilience in the domestic economy than what we understood, in the days gone by. If you think about the Nene Gate, for instance, we saw a significant sell-off. That sell-off is not the same as what we're seeing now. It's much more muted now than what we experienced then, which means there are resilient factors in the South African economy. Credit rating agencies, again, S&P upgrade last year is a vote of confidence, which means there are SA-specific fundamentals that are improving. Institutional strength is much better. Reforms are continuing. And we're starting to see a lot more positivity, even in the domestic investor base, which tends to lag the offshore investor base in terms of confidence. So that, again, is starting to build, momentum going forward. One of the aspects that we always hear from clients, from institutional investors across the board is the issue of political stability. The GNU has proved to be much more stable. We've been able to pass the budget this time around without noise. Last year was a learning phase. I wouldn't see it as a complete shock. Other countries take years to actually construct a budget and put a government together. We took a couple of months. So we actually have to look at that in the context of what's happening globally. So we have actually improved. SARS has been a lot more efficient, collecting more revenues than initially expected, which again shows the institutional pillar of ratings have improved significantly from the days of state capture. Yes, it's not done, but there's significant improvement. So all of those factors are still there. They are not negated by the issues that we see out of the Middle East. Those issues come through markets, sell-off in bonds that we just saw over the last week or so, oil price that can influence inflation. We have been thinking the SARB potentially would cut rates, in the next 2 weeks, in the March MPC. Potentially that cut now is off the table, given the increase in oil price, the sell-off in the currency as well, which means it's on hold for longer. That's the more likelihood. For the global economy, stagflation is always a risk, but putting a probability on stagflation is putting a probability on how long the conflict stands, which we don't know. So it's quite difficult to put probabilities on this.
Okay. Yeah, that is the big question about how long this war lasts. Jane, I only recently found out how dependent the GCC countries are on that Strait of Hormuz for food and, water as well, because I see Iran just recently attacked one of the desalinization plants. And to me, it's scary, because I wondered in the beginning why Iran was attacking what I thought were friendlies, but clearly not. Or maybe, or I don't understand it. Give me some idea. Do you have any feeling on kind of Iran's nuclear ambitions? What is it for? Why? Where are they going? Where are they going with this?
So, I guess the irony of all of this is that Iran, it's been pretty well documented, didn't have nuclear ambitions other than a civilian one. And I should imagine that after this war, that's going to change quite dramatically. Because
what do you, sorry, Jane, sorry to interrupt you. What do you mean by a civilian ambition of nuclear, kind of civilian ambitions?
So it's the power for civilians, fuel power, energy power, rather than, let's bomb our neighbors kind of power for the civilians.
Sorry to interrupt you, but isn't that exactly the point? Is that nuclear is not just for war. It's actually to create energy. Even South Africa has nuclear ambitions.
Absolutely. So, I mean, whatever you think about Iran, firstly, the former supreme leader issued a fatwa, a religious decree about having nuclear weapons. We're not going to have nuclear weapons. It was also the most monitored country in the world as far as nuclear weapons is concerned. So the International Atomic Energy Agency was given free rein to all the energy sites, all the nuclear sites. And a deal was also struck, I think it was about 2015, with the US, with France, with members of the EU. And in that deal, Iran promised to try to stick to the sort of the 3.67%, which facilitates a civilian deal, that they would allow access at any stage by these agents. And the latest report was that their enriched uranium was at a level of about 60%. If you want to make a nuclear warhead, it's got to go up to 90%. It is achievable from 60%, but it could take years. So actually, they've been bombed, one of the reasons, for something that they don't have. And that's pretty well noted. I mean, as you know, Israel has a nuclear weapons program, as does the US. Israel has never allowed any agents onto their soil, whereas Iran has. So, I mean, that's obviously concerning because you've got these two nuclear states. And one of the reasons countries have nuclear weapons, it's almost like an unspoken gentleman's agreement that we're not going to use it. But it's nice for you to know that we do have it in case we do. And, you were touching about desalination plants. When I lived in Qatar, I mean, it's all about desalination plants. That's why there's a lot of Arab states looking towards Africa for their food security, for their water supply. So they're pretty much reliant on everybody around them, access from Saudi Arabia to get their foods and their fresh goods.
Isaiah, so you spoke very positively about the South African economy and how the starting point is very different this time from where we were when we got appointed new finance ministers on a Sunday night at 11:30. So what I'm seeing today, which is very interesting, is that the South African market is completely discounting the war today. So if you look at the market, I'm gobsmacked at how our bonds have bounced back. We've had $1 billion of outflow, over $1 billion outflow. Foreigners are selling, running for the hills since the war started. And yet the risk premium from this war seems to be discounted completely, almost, as if everyone knew what you were going to say about South Africa, being in a very different place. Do you think that this continues unabated, that this positivity continues in South Africa despite the war? And I guess it's hard to say because you did mention that depending on how long this war carries on will be the impact that it has on global and our economy. And are you pricing in for now, just for today? You can change your mind tomorrow morning. A rate cut or a hold or a hike for our March MPC?
Look, for now, it's quite difficult to continue to hold a view that says in the next MPC we're going to get a rate cut, given where oil prices is. Fuel price is going to increase quite significantly. The SARB is quite sensitive to a weaker currency combined with high oil prices. But also we have a foot and mouth disease that is causing, meat prices to increase quite significantly. That is another shock that we are likely going to see on food price inflation. But the SARB's way of looking at these shocks is to ask the question whether it's transitory or whether it's permanent. And if they deem the developments to be transitory, they can look through, the shock and then continue to actually say, let's cut. But again, the May MPC is not too far. If I were to put myself in the SARB's shoes, why rush to make a decision when the environment is not clear? Rather wait 2 months, assess, see how the conflict continues, see the impact on oil prices, and then make a decision with a lot more information and idea of how this progresses. So I'll be tempted to say they're likely to stay put. We still assessing, the extent of the increase in oil prices that we're going to see over the next couple of weeks. But to your point, a decline in oil prices over the last, couple of hours by 32%. That's a response to a statement from US President Donald Trump to say the war is close to being over. But as we have learned with the tariffs, anybody that believes that at face value hasn't learned that we can have a change of policy literally on an hourly basis. We have learned that, which means we shouldn't take what is coming out of the US administration as actual decisions until the actual decision is made. So it's quite volatile. The positivity is likely going to continue. But what we have to agree on is that, capital flows into the South African economy, they matter. So if we have capital outflows, the number that you put $1 billion or over $1 billion of outflows from foreign investors, that's a significant, sell-off over a short space of time. So it will have an impact on investor sentiment globally. But if there is a de-escalation, potentially we're going to see that capital flowing back into the South African market. If you put South Africa, you put Brazil, you put Turkey, Mexico on a like for like, and in terms of the potential projection going forward, you will struggle to not see South Africa as a potential investment destination, given the sort of reforms that we have been doing. South Africa typically shows up in the current environment as a good investment destination, which is why we have seen capital inflows before this war, started, and the same fundamentals are still present. They haven't reversed, which says to me, if the war de-escalates, those fundamentals will again be the reason why we attract capital flows back into the market.
Thanks, Isaiah. I like your positivity. Look, it's such a relief. Carly, there's so many questions. Do you maybe want to ask some of them? Because I will just hog this conversation because I want all the information for managing money, right? Or your funds.
Sure, we can go through a couple of them. I think one that really jumped out at me, because it's a question that I've actually been thinking while you guys have been chatting, is we're hearing a lot about these sort of kind of trends and predictions based on what's happening. But what people want to know is, what stocks must we invest in now? What are you investing in now? And which ones do you think can we maximize our profit on in this situation? How do we get the upside of this in our investing decisions?
So I think this is a question for the moderator, unless Isaiah wants to take it.
Jump in.
No, the moderator, definitely.
It's difficult to stay because you don't know what's happening, right? So let me just start with oil falling 30% overnight or in the last 24 hours. That makes Sasol an absolute short in my mind. Sasol is so heavily geared to the oil price. Just generically speaking, I've really always liked the South African banks. And of course, you saw FirstRand's results the other day, or interim results, I think it was the other day, an increase in their dividend payment. They're nice and cash flush. I do still like some of the gold producers. I know that sounds weird because I've been, I'm not a gold bull by nature, but with this gold price, the sustained gold price, there's no doubt that our gold companies are going to be making extraordinary profits. I am, of course, concerned that they haven't spent their money on CapEx and where it's going from there. But in the short term, I'd definitely be buying a few gold stocks. And then banks, as I say, probably where I'd be, And then in the bond market, we're still, it's a bit more difficult. We've got to see what happens with interest rates because we were quite concerned that we'd see a steepening of the yield curve. In other words, the long end of the bonds would sell off. And so we wanted to be positioned in the short end. I'm going to watch and see what happens on the 29th of March, I think it is, with interest rates.
Great. So obviously none of this is advice. That's why we do things like this, so that we have the context. Everyone
can
needs
I
to do their
say,
own research.
yes, but can I also say that we, at Cartesian, we spend our days watching this market, our
This is
minutes,
true.
every waking minute. So there's always the professionally managed funds on the Easy Equities platform.
Put it this way, I'm listening. I'm listening. Okay, then we've
Maybe,
got some more.
maybe
Oh, sorry.
I
Yes,
can give
Isaiah, jump in.
a different perspective, not recommending a particular stock in particular, because we do fixed income research and not equities research. We have a different business that does equities research. The way that one could look at this on a longer term perspective, discounting what's going on in the Middle East, is to look at which sectors benefit when the state opens up sectors to the private sector. That's one way to look at it, because all these structural reforms means a transfer of value from the state to the private sector. Who are the participants in that value chain? So those participants will tend to benefit. And then you look at which sectors tend to benefit when we see fiscal consolidation, which is essentially the position that National Treasury has taken, that we're going to run primary surpluses for the next decade. And then figure out, historically, when the state consolidates, which one benefit, or historically, when the state spend a lot, which one benefit. Those will be the losers. In every reform, there are winners and losers. So just figure out which side, is gaining a lot more when the state is doing these big reforms.
Interesting. So continuing on that thread of sort of investing and making informed decisions there, I thought this one was quite a good question, because we spoke now so positively about South Africa, and also like you, Anthea, I'm like feeling so like pumped about it. It's so nice to hear. We have someone that's asking, I have South African clients invested in euro, pounds, and dollars. If the war stabilizes and the dollar stays at 15 to 16 rand to the dollar, would it be good for them to invest some capital back into South Africa? And maybe more broadly, should we be looking at South Africa as a good place to put our money now?
Since I've been speaking,
Which one of us?
I want both.
Let me try first, and then you can go, Anthea. Since I've been speaking on all these reforms locally, I think it's always a relative play, local relative to offshore, and then what are the underlying drivers of that performance? Where the underlying drivers are not, rooted or grounded in real growth enhancing reforms, then it means those underlying drivers are not, stable enough. They are going to quickly reverse. In this case, what we are seeing in the South African economy is a fundamental remaking of the structure of the economy. If you think about the energy sector, the private sector investing in generation, that's a fundamental remaking of the energy sector. If you think about the logistics sector as well, that's coming, it's going to be a fundamental restructuring of logistics. So long term, it makes a lot of sense that the private sector is going to be increasingly a player in sectors that have been dominated by the state. So that should be positive. Yes, we can debate in terms of the timing to say these reforms are too slow. That's always what we get. But I would argue that only countries which are run by dictators, or the US that have the power of just signing a document to change policy immediately, do you get a quick policy change and an implementation over a year for some of the policies that we're doing. In democratic states, policy changes of this nature takes 3-4 years to actually implement. I know we are impatient because we have had low growth for a very long time, and that's normal. But if we have to benchmark with other countries, reforms take time. And what we have seen so far are good reforms in the right trajectory, in the right direction. And if you're a long-term investor, that's what you look at. The true fundamental drivers of long-term growth, that's what gives you return over the long term. Short-term, obviously, it's going to be shocks and you can respond to that. But if you're looking at long-term investment, then you have to look at the true fundamental drivers of growth, which are the reforms which I think are positive.
Yeah, so Carly, I always joke that when the rand weakens, my clients want to take money offshore. And when it strengthens, they want to bring money back, which is completely the wrong way to go. So and the other thing is, you want diversification, but you also want your assets where your liabilities lie. And generally speaking, your pension fund is a liability because you're drawing money, you're not investing it anymore. It's not an asset, it's not going to grow. You're drawing down from your investments to spend it, to live, And so I would say two things to be very careful of. One, diversification. It really is the only free lunch in investing, but you don't want to diversify your profits away. So you need to have good diversification across local and offshore. And if you are planning your pension fund, just imagine what happens when you retire and the rand strengthens the way it has over the last couple of months. You'd be out of pocket if all your pension was offshore. So that's kind of the advice or what I want to bring to everyone's attention.
Great. So I think let's do one more question, and then we can wrap things up. There's a lot of sort of repetition here, so I'm just going to kind of lump a few together. But wanting to know a little bit more about the politics. So maybe this is one for Jane. I've got a question. What about the Gulf states? Will they join the attacks on Iran? And what about the Iranian people? What happened to the people rioting for regime change? You're on mute, Jane. We don't want to miss out on those pearls of wisdom.
No. I'm so glad that question was asked, because I actually was asking about the Iranian people yesterday. But let's just deal with the Gulf states first. So Iran is taking a gamble by attacking the US military sites on their neighbors' shores. And the irony here is that these US sites were meant to protect these countries and have now made them, in Iran's eyes, sort of legitimate targets. So Iran has been trying to strike them in Bahrain and Kuwait and Doha as well. I've got lots of friends in Doha. They just said it's obviously pretty petrifying. And we've seen shrapnel, hitting some of the buildings in Dubai and UAE. The question is, how will these states rise up and just say, listen, okay, we're not prepared to have a US military force here anymore because you're not protecting us, and in fact you've put us in the line of fire, or we're going to unite, which is they've been talking about recently, and respond. So at the moment, what they've been doing is striking down missiles that have been coming over. These are the Gulf states, protecting their people. But when is it going to change? That hasn't happened yet, but I think that is key to how this game is going to play out. Again, as I said earlier, I think Iran has overplayed its hand. It's putting too much faith in their strength of their neighbors, and also that also plays into that Sunni Shia divide, which is a whole nother topic. But yesterday, when I was speaking to my Iranian contact, and I was listening to you speaking about money and all of that kind of thing, and I just find it mind-blowing that you've got somebody like Trump and Netanyahu who are so prepared to go to a war that impacts every single person on the planet. When South Africa was turning, it's going to hit our pockets. But the poor Iranian people, those who've got nothing to do with a regime that they find utterly despicable, they are in dire straits. My contact was telling me yesterday that the local TV is pumping out all this kind of rah, 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 Iran is winning, we're defeating everybody, everything's going to be fine, as they become increasingly draconian, as the grip tightens over Iranian people. And I think this whole war, the backlash, or it's going to backfire. We know that the US isn't doing this for the Iranian people. They're doing it for regime change. And we know how that plays out. My contact was also telling me that there are kids in the streets with guns who are stopping people in their cars. So it's giving power to the wrong people. She said it is, so many of them were happy that Khamenei was killed, the former supreme leader, but more frightened about where this leaves them. And many fear that it's just going to get a whole lot worse.
Well, thank you guys for all that you've contributed today. You've given us all a lot to think about and a lot of context that we needed. I wanted to know if there's any closing thoughts that you wanted to share before we wrap things up.
Maybe let me add a bit. We haven't spoken about China in this, instance. We haven't spoken about India. We haven't spoken about Venezuela, what happened there and how it all plays out. A different perspective to see the potential ramifications and potentially even how long this can last is China used to get oil from Venezuela. That has been closed because it's now under the control of the US. China used to get oil or gets oil from Iran. That's the major supplier, which the US is now in conflict with. Should the US succeed to get control of Iranian oil, then it means China is going to be squeezed from a supply of oil perspective. So one should be able to think about what would China's response be? Will they potentially support Iran to withstand this war and continue to have access to Iranian oil? That can actually prolong the conflict, even if it's not explicit, but it's a risk that is worth considering to say in our thinking of how long this can last. The question earlier on that was asked, will the Gulf state be directly involved with Iran? I think we have to put China in the bucket of this conflict, given that it depends to a large extent from Iranian oil. So it's just one other perspective. But I think more broadly, as my concluding thoughts, the volatility is quite extreme. It all depends on the US, when they decide they want to end the war or not. And there is no one that knows the duration of the war. But if we go into history, these sort of wars have never lasted a month. The Ukraine-Russia war is now years going. Historically, we have seen a drag on these depending on what's the objective. So we shouldn't be oblivious to a possibility of this lasting a lot longer, in which case it will have significant ramifications. And of course, we hope it doesn't last as long because the implication for the South African economy will be huge, particularly for the lower income, earners, those that are, don't have much income, given that, food price inflation, petrol price and transport costs hit the poorest the most. That is always the big shock to economies, that cost of living crisis, particularly for those that don't have the means to cushion themselves. So that's really the potential, but hopefully it ends quicker and markets reprice back to a positivity towards South Africa. Thanks.
Sorry, would you mind if I just add something? I think the big concern as well is nobody knows what the end game is, right? There's no definitive layout of what victory looks like. And also, I mean, both leaders have troubles at home. Netanyahu's got legal problems. There are protests over his judicial reforms. People are concerned about the humanitarian crisis that's playing out in the Middle East. And Donald Trump, he's nearly 80. He wants to leave a legacy. And this kind of radical regime change is something that plays well into his playbook. But again, nobody knows what the end game is.
Anything from you, Anthea, as we wrap up?
Yes, I want to say thank you very much to you, Kylie, Easy Equities, to Carl and his team, and to my two speakers. I could talk to you guys forever, spend the rest of the day talking to you. Thank you very much, everyone, for attending.
And a big thanks from me. Thanks to everyone who's joined us today, and I hope you got some value out of this. I know I did, and we look forward to doing even more of these.
Together we'll rise and touch the sky. It's not always easy, but it's easier here.